joined now by Phillip Streible of Blue Line Futures. Phillip, it's great to talk to you. Just deal with oil very quickly. What are the headwinds or tailwinds for crude right now?
Yeah, it's really unfortunate that crude oil hasn't broken out to the upside. It's completely harnessed between the level of support right around $35 and that upside of about 42, 43. We believe that oil will be a good long-term investment. However, we need to get through a few different headwinds. We need to see, some of these lockdown ends. We need to see a resurgence in airlines, also in the cruise ships. We've got a lot of supply out there. They've done a great job taking supply down. We'll be interested to see how OPEC, how good their compliance was over the course of the month. And then, look forward and just, again, look for, a fiscal relief plan and then that stimulus to come and drive prices higher.
Phillip, let's talk about gold. We've seen something of a rally in gold today. The US dollar losing a little bit of altitude. Maybe we could put up a one-year chart for the dollar index. I'm seeing the dollar index itself still above 94, but off its highs of a couple of days ago. That's what's driving gold, I take it, optimism and pessimism over the US dollar?
Yeah, the dollar index. So like on a short-term trade basis, we've been long the dollar 4 or 5 sessions in a row as it signaled some, oversold with those higher lows coming in. But it looks like we might start to go back into that longer-term correction phase. So dollar index might roll back over. To talk about Washington making some progress on these discussions for additional stimulus, that weighs in on the dollar. Just more dollars being produced out of thin air. Those come into the market, and then you start to see all commodity assets generally rise on it. Platinum was really the leader on the metals this morning, and then we kind of saw palladium follow suit. Gold, silver. Gold was a real lagger for most of the session early in the morning, but now it's starting looking like it's going to pick up some steam.
It was ugly for gold. Gold, as of last week, was down. It had posted its 4th decline in 5 trading sessions, and it was the worst. MarketWatch said it was the worst weekly drop for gold in about 6 months.
Yeah, it was a big drop. I mean, if you look at the chart and you come into the pattern, it really, it got itself into this wedge pattern, and it reached like the pinnacle of the wedge right around 950 or so, and then it really started to break down quite a bit from there. We saw a lot of long liquidation. It's all the week longs, and the people that are holding on for this big move, they need to lighten up some of their positions. They need to use pullbacks like what we saw over the last few sessions to build their core positions up, because our long-term outlook is still about $2,200, $2,300 on gold. Real interest rates aren't going anywhere. They had a little bit of an uptick. The dollar index, we're going to continue to see, inflation come in. Dollar's going to be produced, and dollar index will sell off, and that's what's going to lift the bull market and keep it going.
One thing you're watching right now, Phillip, is the grains complex. What are the dynamics there?
So you saw quite a bit of buying from China. That's what lifted corn and soybeans. They tried to, and they did this in most commodities. They built up all their inventory, especially coming into the election, in case another trade war does begin. And you saw all the grains, the prices that lift dramatically as a result of it. Now we're coming into harvest, and we should see significant amount of pressure. So if you're long that commodity, or if you're a farmer and you grew, soybeans, corn, wheat, you're going to want to sell against that, forward hedge that, and start to look at the downside of the grains as we open up into harvest.
So you would say that's a bearish factor for corn, for example?
Definitely, because if you look, the crop has been fantastic. You only had 1 or 2 weather developments that actually hit the growing corn that was out there. You did have a spike in demand from China, but we really do believe that, with weaker energy prices, with kind of this stagnant growth in the United States, you're not going to see big demand. You've got most of the restaurants are still closed down. So there's just not a big demand in the actual commodities, the food commodities right now.
Huh. It's interesting, though. The farmers had a good crop. It seems like in a year filled with disasters, kind of reassuring to hear one thing went right, the weather for the farmers. Phillip, we'll have to leave it there. Thanks very much indeed.
Thanks for having me.
Phillip Phillip Streible of Blue Line Futures.